Hey guys, how's it going? Today I'm going to be going over two companies that I really want to add on to what I've done in the past. So again, we're going to be talking about Corsair Gaming. We're going to be talking about Tattooed Chef. So if you don't know, Corsair Gaming just released a killer quarterly earnings report. And if you don't know much about Corsair Gaming, they're basically a company in the streaming and gaming industry where they offer software services, gaming components, gaming systems, streaming gear, and gaming peripherals. And just to give a little bit more of a visualization of what they sell, is stuff like controllers, mics, a bunch of components to go with building your own PC for gaming, keyboards, headsets, mouses, gaming chairs, lighting, etc. So these are a few things that I want to take note of on what Corsair just reported. So if you look at the gross margin expansion, these things are really important for companies. You want to see companies that are growing not only in revenue, but you want your margins to be increasing as well, because it's not only a good thing that you're growing in revenue, but more of that revenue is going to be going to the bottom line, and that's what you can see with the segment gross margin is more of this revenue is going to be going to our bottom line. You can see insane growth coming through this company with 108% coming year over year through growth within the segment gross profit. If you look at other things like expanding adjusted EBITDA with low capex, capex means basically, or what are they investing in? What are they buying? Stuff like that. Again, it's all growing. And then not only did they have stellar earnings, but they increased their full year 2021 guidance from 1.8 to 1.95 billion to 1.9 to 2.1 billion. As you can see, the other increases in guidance in the financial metrics on your screen. Okay, now to put this in perspective with their adjusted earnings that we're going to use for the earnings per share, and why you use adjusted earnings is basically sometimes with companies, there are one-time expenses that occur that really isn't indicative of how the company's really performing. So you adjust what their normal net income is, and you get to adjusted earnings. So that's why adjusted earnings is always kind of used as a reference point. So adjusted earnings in this quarter was 58 cents. You multiply that by 4, you're going to get $2.32 for the year. And if you're using that as an assumption and you want to figure out the earnings per share, this means that the price to earnings of the stock right now is going to be about 14.5 times. What company has high growth like that, increasing margins, and trades at about a 14.5 price to earnings? Not many, I'll tell you that right now. One of my reasons why I think maybe it's being disregarded is that the gaming industry isn't expected to grow as fast as it is right now. So I think people are expecting the earnings to go down in the future. But if this company can deliver and they continue to grow, the earnings aren't going down at all. And then at some point, it's going to reflect how this company is really operating. The stock price will reflect this. And I think, in my opinion, it's going to happen worst case scenario mid 2022. And I think this is going to skyrocket. Okay, the second thing I want to talk about is again Tattooed Chef. And I talked about this in the last time. With the balance sheet being so cash heavy, they had to make some sort of acquisition, some sort of news, spend that money in a way that can drive value for shareholders. And on May 3rd, this news came out, which, like I assumed, that they would make some type of acquisition to expand where their products can go into stores. So basically, what happened is they went into agreements to acquire New Mexico Food Distributors and Karsten Tortilla Factory. So basically, what's so important about this acquisition is that it really helps them stay vertically integrated. A lot of their products, they have tortillas in them, and if you're acquiring a company that makes their own tortillas, this allows you to have more control in your own product development. It allows you to do literally everything you want. You're in 100% control of all your products, which I love this acquisition to be of. Not only this acquisition is great for this company, there's going to bring synergies, cost synergies, but it only costed $35 million and they used all cash. So in the last quarter, they actually had, if I can find it, their balance sheet was they had about $132 million in cash. So we know $35 million is now spent on cash. So they have almost still $100 million in cash sitting on their balance sheet, an assumption that likely still needs to be spent in some other way. I just want to bring this acquisition to your attention, and this is what they think the benefits of this acquisition is. So in their opinion, it diversifies manufacturing capabilities. The acquisition of Foods of New Mexico allows Tattooed Chef to expand further into the $20 billion Hispanic/Southwest food sector and beyond, including frozen, refrigerated, and ambient products. Utilizing these new capabilities, the company expects to launch Tattooed Chef branded products in additional categories. So, Tattooed Chef right now is killing it in the frozen aisle. There's a specific market cap in the frozen aisle that really can't be expanded too much as of right now. There's not much growth. So where they have to grow the company is they have to expand into different products. They can make things like granola bars or whatever they may want and go on shelves within grocery stores now, which is what they're doing, which is super important for this company because you can obviously see that they're making an effort to grow and they're making it with acquisitions that give them synergies and allow them to do it in a professional manner, in my opinion. Second point, expands product capacity. Foods in New Mexico, 2 facilities total 118,000 square feet and provides Tattooed Chef additional capacity to continue to innovate. So they have more capacity to create more foods. They're going to have a higher volume to be able to produce their products. Accelerated expansion outside frozen food. So again, we're talking about, they're in frozen food right now, and they want to expand outside of it and offer new products. And this is an exit opportunity, not necessarily exit, but an opportunity to expand. And not only with Corsair Gaming, but Tattooed Chef has now updated their guidance and now expects the revenues to increase about $7 million, which is an increase from 58 to 63% growth in 2020. Expect the gross margins to be in the range of 20 to 25% and adjusted EBITDA to $2 to $4 million. So those are the 2 things that I wanted to get to your attention. Thanks for watching. If you guys have any questions, feel free to put it in the comment section. I'll be glad to expand on any ideas. And also, if you want me to make a video about anything, if you're maybe interested in looking at some stock or whatever, and you want a second opinion, just put it in the comment section. I'll be more than happy to help you out, make a video on it. Especially if you subscribe and you say you did that, just put something in the comment section. Say, hey, I subscribed. I'm interested in this. Maybe make a video on it, and I will. I promise. So yeah, thanks guys.